It's Fed Day. Who really cares? A lot of other things going on in the market. A choppy market. Oil, natural gas moving around on headlines. S&P showing incredible resilience here. We got some corporate news with the optical stocks. We got some earnings news, Lululemon to talk about, Macy's to talk about. We even got some econ data, PPI at 8:30. 8:35. Let's talk IPOs. We had a drone IPO yesterday. Our buddy Eric Krull, the Lifecycle trade, will join us. Maybe some ticker time. We'll stick some ticker time in today as well. It's Wednesday. It's pre-market prep. Let's get the show started.
The volatility right now is really incredible.
Wow, look at that consolidation on the upper right chart.
You know what we've seen this earnings season? Some of these expected moves get even more violent. This is why I have switched my strategy 10 years ago. And if you're chasing, you're in trouble.
Okay, leaky here. Looking at some charts brought to you by TradeStation, Board to Trade, chart analyze, customize, all-in-one platform. Trade smarter and stay in control with the platform built for serious traders and traders that want to be serious traders. Okay, folks, we're in the green. 16 handles here, 67.89. We were above the high from yesterday, but little nervous markets here. Let's take a look at the buck. The buck is flat here at 99.34. Rough couple days trying to catch a bounce. TLT climbing back after getting clobbered, up 37 cents at 87.82. USO bouncing around after hours pre-market, down a buck here at the 118 area. GLD not having a good day, down $7, 1.5%, 452.23. SLV going the same way, not as much on a percentage basis, down about 0.5%. That's 40 cents, 71.25. And Bitcoin taking a little breather after a nice 3-4 day rally, down $1,560 at 73,125. Dennis, we are in a resilient but choppy market here. What's the after hours and pre-market radar have for us
The
today?
chop continues, but I said it yesterday. I'm going to say it again. I feel like the bulls have re-grabbed control, at least in the short term here. As long as we don't get more escalation over out of the Middle East, I think the market wants to go higher, and it wants to go higher led by hardware, a theme that we have been preaching, at least I have been preaching here for the last month. I think that's going to be what brings us out of, this little temporary doldrums, call it. We can't call it a bear market. We can't even call it a correction because the S&P only ever got down, I think, 5.5%. So it wasn't very serious. But as long as there's no escalation in the Middle East, bulls want to take it higher. Mr. Bremster, come on in. Was there any escalation? Was there any de-escalation? Or was it just a lot of noise coming out of the Middle East last night? I'm going with noise.
It seemed like a lot of noise, yeah. And there was a major move lower in the stock market. I would call it major, and a major move higher in oil this morning. If we zoom into like a 1 or a 5 minute chart, we can see it. Here we go. I saw a headline that let me find it here real quick. State Iranian TV saying that part of the South Pars gas field was attacked. There was a couple of sources that were attributing the spike higher in oil. Definitely was a big volume bar in oil, so that's also something to note. But what I'm going to say here is the South Pars field is the largest natural gas field in the world. So if this was a major headline that this field was attacked, I forget if I said that was an attack that the Iranian state TV said happened on this field, controlled by Iran and Qatar. If this was something that moved the whole market and oil, wouldn't it have first moved natural gas if this is the largest natural gas field in the world? And natural gas didn't really move on this. So I'm kind of discounting this move lower in markets and oil. I think it's just more noise. I don't know if we had a headline to justify this necessarily.
I think we have, there's headlines all the time coming out. So there's always going to be something that makes it jittery. Is there something coming out giving it a sustained move? Is there like, a Trump commentary and saying the war, is going to continue on and through the summer? There's nothing like that.
Yeah.
So right now, an explosion, certain places, more like jittery for the market, knee-jerk reaction, maybe a quick little spike in the USO, and then kind of a leak back. I mean, bring up the USO because we still have this inverse correlation going to a certain extent. Kind of broke down a bit yesterday, which is good news for the bulls, because if the market can start going higher and USO just kind of staying the same, that's good news. But you can see USO just kind of spiking around. We were down a bit, we're up. The S&Ps are leaking here a little bit as well. The inverse correlation remains, but it's not as strong as it was last week.
You know what I'm seeing in the market? I'm seeing, and I'm just looking at the S&Ps here, and I'm just going to go back. I'm going to go back to, this whole area here, going back really
Sure.
for the year, how we had a battle of 7,000, right? And it looked like, yeah, that's going to be it, man. We're going to hold. We're going to hold 7 and we're going to take off. Well, we have some dips, and the dips are very sharp. A lot of them are in the after hours or the pre-market, and like boom, and then we come back up. So then you had your last battle of 7,000 in February, and then you got a little battle going for 6,900, right? You had your dip, you came back up. Well, no. 6,900 is going to come resistance. We established that 2 weeks ago. Spike down, you had to be quick. Spike down 2 days ago, you had to be quick. And now 6,800 is coming to be the battleground area. And I mean, to me, I could see three highs in the same area.
Yeah.
Okay. But my lows are scattered. And this one was on a Monday freak out. This one was overnight that you never got a really a good shot at, right? And the after hours session was or the regular session was different. So, not being bullish or not being bearish or not, evaluating the war and everything, I see major resistance coming down in this market.
I think you can say that, and we're still in a trading range here. So, we're still going to be headline dependent. It's still going to be escalation, de-escalation there. But I think the market wants to go higher. It feel like, and I trade a lot on feel, especially when I'm trading every day and putting the hours that I'm in. I get a pretty good feel for it. That's what I was saying yesterday. I was saying, 2 days ago when we had the big rally off the lows, I'm like, I kind of feel like this might hold. It did. And we're still dipping. We're not going straight up. There's still a battleground here. It's not going to be easy. We don't have to chase. But on dips here, we're starting to see, some of the themes that were driving us higher earlier in the year starting to re-emerge. Hardware, moving away from the war, moving into what is driving us. Micron, new all-time highs. SanDisk, new all-time highs. Western Digital, new all-time highs. Seagate, STX, not quite there. It's off a bit, but moving up and looking healthier. We have the optical fiber conference started yesterday morning. You saw some of these optical names really getting beat up over the course of the last week with some more overbought. LITE, Lamentum Holdings, was down substantially yesterday morning, was down $50. That turned around on a dime, rallied 50 yesterday intraday, rallies another 50 points here overnight. LITE trading up 7.49%. Again, Catalyst trading 101. Conference going on probably helps. Another optical name, AAOI, up 10%. Was really beat up the last few days. Maybe just got overbought. It went from 60 to 120 in 5 days, basically. So definitely overbought. But now retraced back. But you can see, these names starting to get the dip, starting to get bought in these names. COHR is another one. Coherent, kind of just stuck in the mud a little bit, but having a pretty good morning, up 11 points here. This is like a theme that, I think is going to continue to be prevalent here. So you can see, there's certain stocks just can't get it going. Software kind of stuck in the mud here again. Other names, we can get the Lululemon earnings and retail and some of the other stuff's kind of stuck. Hardware, not. Hardware still very strong. The recent dip in Micron and SanDisk, bought tremendously by the market. And in 1, 2, 3, 4, 5, 6, 7 days, Micron has went from that low of 357, where all the bears were declaring it over, to 467, 110-point rally in 7 days. Don't tell me hardware isn't driving the bus here again. It is for our markets.
On the optical names, jumping back to them for a sec, I mean, you can't especially tell if you look at some of the charts for these optical names, and we can put a little optical watch list on the banner here in a sec. But these names over the last 2 weeks, maybe 3 weeks, have really gotten a lot more attention from traders. I think it was kind of maybe forgotten that fiber optics is a major piece that goes into data center connections. I mean, this is the large majority of the way that a lot of these connections, a lot of the cables are being made by these companies. So this is you know, has, I don't want to say it's like emerging, because I think it's already emerged, but this is, you know, like a bit of an emerging way to get some more exposure to data centers, optical names, fiber optics.
There, and then you can get into the picks and shovels, you know, obviously, and we know we've talked the energy trade as well. Gee, Vernova's perking up, starting to look better. I recently bought VST live in the STN room back at 161 just 3 days ago. That's at 165. So some of these energy names starting to perk up here again. CEG starting to perk up. NRG is another one, catches an upgrade here this morning, I believe. You know, so there is, you know, still those themes aren't going away. AI is not going away. The war will eventually go away. There'll be another war. There'll be another, you know, hostile. Will it ever end? You know, the war is raging in the Middle East for 2,000 years. But will the U.S. involvement in the war eventually end? Yes, it will. Will AI go away? No, it will not. So, I mean, if you're a long-term investor, you use these opportunities to get exposure to themes that are going to drive the next bull market. Hardware and energy, that is what I'm going to continue to preach. Why do I continue to say those two? Because it's working. Notice I'm not saying staples right now. It's not working, so there's no sense bringing up. We're going to talk about what is working. I think staples, once you start seeing job losses, are going to be okay. I do think Walmart is going to be okay. But, you know, I'm not jumping in those names right now, because right now, you know, we're in a little bit of a pullback in the markets. But hardware relentlessly higher here. You know, the S&Ps are barely off the lows, yet here's all your, you know, obviously memory names making new all-time highs.
Pockets of strength, no doubt. I mean, there are pockets of strength. We didn't like the XLP being up there and leading us back in February, right? That's a sign that the utilities are up there. So there's definitely pockets of strength, and you know, I go with your assessment on the war, Dennis. You know, for how long it's going to go on and what the implications are.
Well, we don't know how long it's going to go on, but what we do know is the market will eventually look past it. The market isn't going to look past AI. I mean, everything is going to change. I mean, you know, we've got obviously, you know, the NVIDIA conference still going on here, and it's still a driver. And you can say, well, NVIDIA, you know, it's really not done anything for 6-7 months. Totally true. AMD and NVIDIA are stuck in the mud. Those two stocks not really doing much at all. Is that concerning to the overall market? It can be. But you can see certain themes that want to go higher. So why not be invested in the themes that want to go higher? So, I mean, if you're a trader, Micron SanDisk, you know, we had Mary in the STN room yesterday saying, man, I should just stay long, stop doing everything, and just be long SanDisk and just be killing it and buying SanDisk on dips. And I mean, that is what is working. This memory log jam, this memory, you know, like lack of supply here is not going away. The bottleneck exists here. And when you see SanDisk in 1, 2, 3, 4, 5, 6 days, 6 days ago, SanDisk was 517. 6 days later, it's 734. We're not in a rip roaring bull market. In the same time period, the S&P is like basically flat. So there you go. Relative strength off the charts in the memory names here. So, you know, this is just a theme that's going to continue.
Do we go to Trade Desk?
Yeah, we can. I mean, the software names are the opposite of the hardware names. So I still think our predominant theme before the war started was long hardware, short software. Software has had, you know, it was just got overdone. Definitely had a dead cat bounce late February. Nice IGV, nice up 16% in like a week and a half, because oversold. But does that mean it's out of the woods, or was that just an oversold dead cat bounce? I mean, TTD is starting to tell you, wow, you know, like when you get these TTD for instance, let's bring up the chart on that one. And Brent, so you can give us, you got the news there. And Rosenblatt also downgrading the stock here today. Goes when you're in a stock that's in this hard downtrend, and it goes from 21 to 32 in 5 days. What do? You do not chase it. That overall trend is still heavy down. You sell rallies on stocks and downtrends. You buy dips on stocks and overall uptrends. That's the winning formula, folks. So many people want to be the hero. I do it at times too. It's natural human tendency to want to buy the weak and sell the strong. You got to break that tendency because it just doesn't make you money. It loses you money. So TTD has this ridiculous 50% rally in 6 days. It was an insider buy, an upgrade in there, and there was some other headline. Gone. 8 days later, 3/4 of that gain is gone. Why? Because there's so many bag holders in here. People are saying, man, just get back to 30, give me my money back. Just get back to 28, give me my money back. 32, oh, what a dream. Sell, Mortimer. The stock's still getting disrupted. Stock's still a mess. Can these themes turn around? Can it, be a turnaround story? Yes, but those are the hardest trades. It is so hard to turn momentum around.
Also, just go to you with this, Brent. We had a huge insider buy, right? And I think it might have been right at earnings too. And they came out, and one thing, Brent differentiates, these press releases and the information that you got. And Brent, go into that. They mentioned they talked to somebody. Was it OpenAI? Did I remember correctly on that?
Yes, it was OpenAI. You can see the move higher there whenever that was. Maybe you can't notice. Yeah, I think this move,
you can.
Yeah, right there. So the report was that Trade Desk and OpenAI held early talks about the Trade Desk providing ads on OpenAI's platform. And the thing that I was highlighting when we were talking about this news item when it had just happened on PreMarket Prep is if you get a report that says talks were held, past tense, why don't we have an announcement then? If talks were held, then okay, confirm that the talks were held, then they develop something. A lot of times when you get those headlines that say talks were held and we don't hear about it, it means that the companies came together, they couldn't find some agreement, and they moved on. So that was a huge move in Trade Desk. Yes, it was a relief rally, I would say. They were looking for anything. Bulls were looking for any silver lining. They got it, a huge relief rally. But that headline was definitely a major sell the rip kind of moment, in my opinion.
Yeah, I think you're making a great point here because so many times you'll see, talks were held and stocks rally 20, 30% on these talks were held. A lot of times talks were held, nothing came of it, meaning, we just don't want to buy your company here. Yet they're rallying the stocks 10, 15, 20% on the hopes that talks may continue.
Exactly.
Like talks currently happening or, rumors that, hey, there's a buyout coming here or something, that's completely different. Talks were held. The algos and the market will buy stocks up, especially when they have high short interest like TTD did. And remember our whole short interest conversation, like, well, the short interest is really high. So eventually, this stock is going to go to the moon because that's what high short interest does. And we debunked that. I've debunked that on this show for years, is that stocks with high short interest typically go lower because they have short interest because the smart money is short these things because they're crappy companies. That's why they have high short interest. They have these little short squeezes periodically where, either crowded shorts and, they scramble a little bit. And we just saw that in TTD again. But if you look and take, the predominant theme of just, if you were just an investor and you just always invest in high short interest names, you will have the crappiest long-term investment like portfolio imaginable. I cannot 100% guarantee that, but with 99.9% accuracy, if you're investing on high short interest, you are doing everything wrong. Stop trading. Go get a different job. This is not for you. If you're investing on high short interest, investing long on high short interest names, that is not the thing. You can trade these names. They'll have some short squeezes. It's fun to trade short squeezes. Every quarter we get a day where it's fun to trade the short squeezes, but then that's it. And these stocks peter out. But again and again, the common theme is stocks with high short interest have high short interest for a reason, because they're crappy companies.
And I want to just close the loop here on TTD with this report. I'll put it back on screen because I don't think we actually mentioned it. This report late yesterday from Ad Age, good source. Publicis no longer recommends the trade desk to clients following an audit. They said, let me see if I can find it here real quick. Why they said that they did this audit and it revealed multiple violations of the master service deal that Publicis has with the trade desk. So why I'm bringing it back up here is because now that we've got this report, that pop that we were talking about when we heard this ChatGPT or OpenAI thing, the move is gone. All of that upside is gone. Bears have totally taken control back in TTD. If that was a silver lining for you, you need to get a new thesis.
Gave it all. I mean, also one thing to keep an eye on is when you get these news days and you go to them, like what was the actual price action on that day? And I don't know if it exactly opened at the high. Yeah, I mean, opened 31.5, ran up to 32.90. It closed that day at 29.70. And to me, that the price action on days like that are very important. The following day, you couldn't even get out at the mark. You couldn't even get out at 29.79.
Yeah.
The high of the day was 29.50. It's still it only dropped 50. It just kind of leaked. But use up, if you're trading stocks like this and when they have the news, keep an eye on the price action. Huge insider buy. I think it got an upgrade that day. I don't know if they had earnings or whatnot, but the price action from that day was pretty telling. Since we're talking, let's finish up on the shorts and the short reports. With Muddy Waters getting dirty yesterday. But the street, Brent. I don't know, man. This thing came down from 30 to 17. Tell us what Muddy's up to.
Muddy Waters. This uses a short report on SoFi. Dennis, did they say they were actually short? I don't know if Muddy Waters.
They're always actually short.
I mean, we assume they are, but I don't know.
They
if they
usually put it in the report.
Yeah,
so I didn't read the report, but what I can tell you is the short seller reports aren't moving stocks like they used to be. Like we're not in Kansas anymore, and they're not having the influence they used to be. I think a lot of people are up to the gig. Oh, we'll short a whole pile of stock. We'll issue a report. And it'll drive the price down, and then we'll make a lot of money. I mean, I think investors in the market is just not into it as much as they used to be. Like meaning that they're not falling. Like remember that one, the fuzzy panda with the, they got the panda with the two guns because we shoot.
You love that one, yeah.
We don't even know who is behind it. It's anonymous short seller.
Yeah.
And remember, what was the stock? It was an insurance company, and I made a lot of money on it by buying the dip on it. GL Global.
Was it? Okay.
It was.
Joel's memory.
This is a company that's been out here for like 30, 40 years. And if you look back to 2024, I'll show the chart. The stock got the short report from Fuzzy Panda, and it went from $110 down to $40 on that report. It was the most ridiculous move in the history of short seller reports. This is not some startup company. This was an insurance company. And anyways, then they came out, remember, it was 40 to 60, and then they came out, and their second report was they caught one of the executives looking at porn. I'm like, this is not a short thesis that you have a company, Globe Life, we can go AI at how many employees just for fun. So Globe Life, how many employees? Globe Life, an insurance company, has 3,800 employees. Well, they caught one of them looking at porn. That was the second part of their short thesis. On that, if you can go back to the show back in 2024, I was like, I'm buying Globe Life right now because this is the stupidest short thesis ever. I bought it, I think, at like $62. I sold it a week later at like $85. I always sell too early, and the stock ended up, it's back here at $139. So that's an extreme example. It's Fuzzy Panda. We don't even know who they are. They got the guns shooting down. I mean, that one's ridiculous in itself. But, these short seller reports just aren't moving stocks like they used to. You aren't seeing 30, 40, 50% falls in these names. I mean, Andrew Leff pioneered. He was, and Andrew Leff put out a hell of a lot. I want to say Andrew Leff put out some great research. He actually picked on companies that, a lot of these stocks ended up going lower. So he did a good job. I think it's just got watered down here now, where there's just so many of these, short sellers just putting them out there, on all these different companies here. And, I don't know if there's something there or not in SoFi. In some cases, Hindenburg was great. They put out great research too. Muddy Waters, has had some good reports as well. So sometimes they put out some pretty good research. But what we can say is the market's reaction to that research is not extreme anymore. It's not what it used to be. And SoFi gets hit on the initial report, falls $1, bounces back about 2 hours later. Couldn't even
like a half hour later. It was
30
like 30
minutes
minutes.
later.
Yes. Yeah.
Yeah.
Yep. So, yes, we need to have these short seller reports on our radar because you want to know why. If you were trading SoFi yesterday, you want to know why that thing fell. But I don't know. They're very dilutive. I think that's diluted. I think that's the point you're definitely trying to make.
I think so. It's just, the investors are onto it and they're not as spooked by it anymore. It's just so many of these. There's like, a half dozen of these companies that do this. We see this, it seems like every other week we've got another short seller report. And it's just the research doesn't feel like it's as good as it used to be.
Did get the snapback rally. The close is 1737. I'll just look at this just from a 4-day perspective here. And for you, SoFi, don't know about the short report, don't know about the company. If this starts to show me an 18 bid, you get above the last 3 or 4 highs here and you have the support move up, that's what I'd be looking at. If you want, a little bit longer term perspective on long term. If you want to talk 4 or 5 days, do we want to talk about the company where Dennis buys a majority of his clothes at?
Lululemon?
Yeah.
He says it.
I don't know if I have any Lululemon clothing. I desire some Lululemon clothing because it's more expensive, than probably above my pay grade here. You know, I wear my Tigers shirts, I wear my ball. I think Lululemon makes some fantastic clothing. I think my kids got some Lululemon gear, but a little bit out of my above my pay grade.
So a couple things here. They had an earnings report last night, and they also are doing a couple. They're doing a couple things with the board, which it seems like good news. I'll get you the earnings here first.
Sure.
Q4 earnings 501, a nice beat versus a 479 estimate. Sales also a decent beat, 3.64 billion versus 3.959 billion. Guidance here on screen, expecting Q1 earnings 163 to 168 versus a 209 estimate. That is pretty notably worse than expected. Also, the 2026 earnings guidance pretty notably worse than expected. There's a little something flying under the radar. I think people are kind of looking at the earnings report and ignoring that the company also issued a press release naming Chip Bergh to the company's board. This guy is a turnaround expert as far as I could research. He ran Levi Strauss for 13 years starting in 2011 during its major turnaround. He also worked at Procter & Gamble for almost 30 years. This is the guy that created Swiffer. He also oversaw the turnaround at Old Spice. He led Gillette right after Procter & Gamble bought that company. He's also currently on the board of Elf Beauty and Pinterest, and he has been the chair of HPQ since 2017. So
everyone likes a good turnaround story.
Everyone likes a good turnaround story.
Everyone does.
And so a little bit more here. We also yesterday had Chip Wilson, the founder of Lululemon, who is the former CEO. He's not at the company anymore, but he's still one of the largest shareholders. He issued a press release before the earnings report, like continuing to urge for change. This morning, he has responded with comments following the earnings report and the board change there. And while I'm intrigued by this Chip Bergh move, I want to mention Chip Wilson's comments. He was encouraged that they're getting this guy, David Musafir, off of the board. He says David Musafir is tied to this private equity fund. And Chip Wilson still wants 2 people that are currently on the board of Lulu off the board that are related to this fund. He did comment on the Chip Bergh news. Yes.
We're just getting PPI.
Okay.
So we just want to get the PPI here.
Thanks,
we are
thanks, Dennis.
here slightly.
PPI coming in.
Conversation, but we do have breaking economic data here.
PPI coming in
0.7% versus 0.3%. So
hotter than expected.
A core little PPI, bit hot. Ex-food energy 0.5 versus 0.3. Yeah, a little bit hot.
Yep. And same with the year over year, 3.9% higher versus 3.7% higher. Is the market moving a little,
Yeah,
Joel?
we're leaking. I mean,
Leaking
it's
here.
somewhat concerning here because we are leaking here a little bit. Does that mean, it's going to
Do you
derail?
know we've
PPI
sold
is not like
off like
CPI.
50 handles in the last hour?
I know. We just
Yeah.
keep leaking here.
Yeah.
Yeah.
50 handles.
That's a substantial move. That is a very substantial move. Now 6,800 is looking a little farther away. Just 8:31. We got our guest coming up. Lulu, I mean, they said a lot of good things. Street's not buying it. It's down 360. I think you have to watch the price action from today. I mean, the COVID low is the only other low that you have in here. That way down at 128.85. So look for some stability here. This had been a good area to caught some bounces. It sat here for 3 months last time back in 2025 near the end of the year, and it had a nice pop. And now you're back down here again. So let's look for stability. Those other lows were right in the 160 area. So maybe wait to see some strength here above 160 instead of trying to buy weakness on Lululemon. These inflation numbers that we're getting right now are backwards looking. They're not counting what's been going on in oil here. These are backward looking numbers here, and they're up. So I guess the Fed won't be lowering rates today. It should be
Well,
interesting.
and this is the thing. I mean, TLT is not really responding here too much.
Okay.
Again, we're putting a lot of weight on PPI, which really isn't, like we're down here because it's hot. We don't like any hot numbers, no hot numbers. But overall here, I mean, this is not CPI. Do I expect us to just roll over and die here? I still think same names. Jay Rice in the chat saying the same thing. Buying the stocks that want to go higher on the dips. So if you get a dip on Micron and SanDisk on these numbers, those are the stocks that want to go higher, folks. Those are the ones where I would continue to be looking, and then other names, they just, are relentlessly lower here. Trade desk, not the names I'm looking for.
All right, it is 8:32. We have our esteemed guest here waiting with a big smile on our face. Eric Krull, the author of the Lifecycle Trade, joining us here on PreMarket Prep. How you doing, Eric? That is a big old smile here. I want to have what you had for breakfast. How you doing today?
I'm doing great. I'm smiling because I was called esteemed, so that's a nice intro here.
All right, so we can talk about the IPO that just came out. We'll talk about that briefly. I know that you're more into digging into the details and looking at things longer term, right? So let's but just real quickly before we go to your presentation, can you just talk about your book here for a second and what the impetus for it and why people should read it?
Well, the impetus for the book was me and three friends. We were all talking one time about how we did not have much success in trading stocks that had IPO'd in their early days. And we wondered why we couldn't find the ones that went up like Google did. Google was an IPO we thought was like the typical stock action that when it came out, it went sideways for a little bit, then up, and then kept going up like a stair stepper. And we thought we need to find the next Google. And so my friends, Kathy Donnelly, Kurt Dale, and Eve Bobach and I got together and we said, well, why don't we research IPOs? And the book was a result of our research. And what we found out was Google was really an exception rather than the rule. And the vast majority of IPOs, instead of coming out and doing pretty well up front and continue to go higher, they typically come out, run up a little bit, and then get a big correction. And most of them undercut their day one low. And then they form some sort of long consolidation phase, which we call the due diligence phase. And then they start to have their advance and go on for many years. So we learned a lot in doing the research. And then we published the book because we felt there was nothing out there to talk about how IPOs in general performed. And we put the book out and it's sold pretty well. And we get a lot of great comments on it.
Okay, 2026. How we doing?
After the Iran invasion here, the IPO market has cooled off. The market's, very much uncertain. And it seems like the people who were in line to go public have pulled back. Right now, the number of IPOs that are out, and mostly this quarter is almost over, but in this first quarter, they're down about 25% from last year, which was a pretty good year for IPOs in terms of numbers and dollars, is the best we've had in a while. And we thought this year might be even better. But right now, with this uncertainty, and the market hates uncertainties, and companies going out public, they also hate uncertainty. They want to come out in a good market. So it's pulling back. The ones that have gone out are a little bit bigger than last year's. The proceeds are up almost 30% per IPO, but the number of IPOs is down.
So, where can you draw a similar period here? First, implications for the rest of the year in the IPO market, and then also perhaps implications for the overall market.
I would say just 2 years ago, there were IPOs coming out and they were smaller in size. They were larger in size, but fewer of them. But I think I'd have to go back even further. I think I really should go back to what happened during the last major conflict and see what happened then. But I haven't done that yet. But I think if we can get some sort of stability in the Middle East, I think we're going to have a good year for IPOs. So I want to see the conflict kind of die down. I want to see some sort of resolution, and then see how the market acts.
Eric, is there any chance we're going to see SpaceX or Anthropic this year? I mean, those are two that people are talking about. We obviously don't have, dates or anything like that, but they're like, maybe this year, we look to prediction markets and they're saying Anthropic possibly later this year. Also, SpaceX is one that everybody's excited about here. What are your thoughts? What are your feelings? Are we going to see these companies this year, or it's going to be another year that goes by with no SpaceX?
I think we're going to see SpaceX. There is chatter about including SpaceX immediately in the S&P 500 index, and that would be
has that ever happened?
Never happened before. If they include them immediately in the S&P 500 index, now all those index funds have to buy the shares, and we might see something we've never seen before in the IPO market, which is we may not get that dip down after an initial run up, because when funds have to buy it, there's automatic demand. Anthropic, it could be. It's either ChatGPT or Anthropic will go public. ChatGPT or OpenAI, they have more problems where they were supposed to be nonprofit, and they've been negotiating for a long time about how do we go public. I'd look for Anthropic. Now, these companies like OpenAI and Anthropic, they are burning through cash. It'll be interesting to see how they come out and what their plan is to monetize their great products, which are burning through billions per year. So I expect those maybe to have initial hype and then initial run up and then a drop like normal. Not sure about SpaceX. I'm looking forward to that. I mean, when they merged it with XAI, I think that made the company even more interesting. And I think that'll happen this year, probably sometime, I'm guessing, before July.
Let's put your slides back up here and just look here, because you got some of the best reporting, the best performing IPOs here since January of last year. Number one's not one that not a lot of people talk about here, but KRMN. I mean, that's just quietly been performing. Some of these space stocks, aerospace stocks, have done really, really well. Number 3 on your list, everybody knows. Yes. And it's CoreWeave. I mean, it's funny to say, a stock like this, yeah, this stock is actually still up from IPO day because it had such a run. Back in April of 2025, this stock, it was at $33 at the low. And then in about literally a month and a half, it ran to $187.
Right.
So it feels like CoreWeave has been a very much, the other way, because it was only up there for a short period of time. It's down here at $81 here now. So it kind of feels like this has been a loser. But actually, technically, from the IPO, it's still doing pretty well.
You're exactly right. You've painted a great picture of it. And that is more typical of IPOs, where they have a fast run up and then they come down. I still think that's in the long due diligence phase. It's not one that's on my radar for being interested in buying right now. I'm still watching it, because of that initial run up. That usually means we call those, when they go up more than 100% within the first 3 months, we call those rare jewels in the book. And those deserve a lot of, watching, long term. CoreWeave, like you said, has come down a lot. It feels like a loser the last 2 years, right?
Yeah.
But I think it's still worth watching, and we'll see what happens. I have 3 other stocks that we can watch. Carmen's one of them, and we'll talk about those in a minute. But I have a couple good biotechs up there with no sales. And so number 2, Maze, not interested. I do not like buying stocks, even if they've gone up a lot from their IPO debut, if they have no sales. I mean, they're always a story stock. And the other one is this other biotech, which is not too far down there, Maine, M-A-N-E, or Veradermics. Again, if they had sales, I might be interested, but they're just there because they perform the best. I'm not really interested in investing in those.
Yeah, I see a couple in the financial services group here, and we're all looking for the AI disruption in financial services here. But a few of one have done okay. Of course, aerospace and defense in the current environment. But interesting look to see Carmen Holdings. Let's go to your next slide. Oh, also, just one point here. You have to trade 20 million a day. Greater,
right?
Or, yeah, yep, 20 million. You and like liquidity, right? To move your big block shares. I like that. Okay, so what are we watching now?
Okay, and before we talk about these, the other thing is that slide. There's only 13 stocks that have come out in the last 15 months that trade over 20 million a day that are up from their IPO day one close. So there's a lot of other ones. There's like 200 some odd other stocks, and they're not above their day one close. So there's not been great performance, which is typical for IPOs. There's always a few winners, but a lot of ones that are not. So, well, let's move on then to those charts. Carmen Holdings, what I like about where it's at right now is you can see that it had its initial run up to like the 40 level, and then it came down a little bit, and it undercut its day one low, like 91% of all IPOs, and then it ran up. And once it got above 40, that's an initial buy on its IPO advance phase. And look how it went up from there. It went from 40, and it kind of stalled a little bit below 60, and then it went up another step, really big step, all the way up to 90, and had a pretty strong correction, and formed a little base there, consolidation, then broke through that. And that 90 level, that was a sign you could buy some. And it's been kind of vacillating pretty harsh since then, since this conflict in Iran. The other one, Diligence, that one had a nice little IPO advance, formed a slight consolidation at the 35 level and bursted up from there to the 50 level. And most recently, it got above 55, almost near 60. And I see that level of its old high. We call that the area of turbulent zone, where when it gets past that turbulent zone, it would probably advance more. I think this would still in its IPO advance phase. And this Solstice Advanced Materials, that had a pretty wild debut week. And then it came back down, undercut its day one low again, like most stocks. It stalled around its old turbulent zone near 60, burst through that, and had a nice advance. It also, with the rest of the stocks, since the Iran war started, is correcting a little bit. But I look for that as maybe a potential buy when it gets back above the old high.
Okay. All right. So there's a look at you keeping your eye on them for potential entries. I like looking at the weekly charts. StubHub, I remember coming out kind of negative on that stock because of the outrageous fees. I had no idea the whooping this thing's has taken. So let's talk why we don't buy on day one.
And this is a big part of our book. We talk about why you don't buy on day one. You certainly can watch, and you wait for to see how the stock actually performs. I had been on the show probably a couple of years talking about, I'm looking forward to see what StubHub does. I do not like the company. I'm like you. I can't stand their fees, especially when you click on some concert or some sporting event, and then when you think you're paying X dollars for each ticket, and then it's really Y dollars, which is a lot more because of their fees that weren't disclosed until you see the final number.
Huh.
No surprise there. that the stock isn't performing well. I mean, look, it's in single digits, down 68% from its day one close. And I can show you hundreds of stocks that do this once they IPO. And that's why you don't buy day one. Klarna Group, another group, I think, if I recall, they're one of those buy now, pay later groups, stocks. It had a pretty big debut, and then it's done nothing but go down since. It's also down 68% by coincidence from its day one close. And then Bob's Discount Furniture, that just came out maybe 6-8 weeks ago. That had a really quick run up and a quick correction. And once again, we see all these stocks that undercut their day one low. And I'd be looking at Bob's Discount Furniture potentially as one, if it can go sideways and form a 3 to 6 month due diligence phase, maybe be interested. And that due diligence phase, really what that is it's a period of time where institutional investors can see maybe 1, 2, 3 quarterly reports and see if they actually have the sales and earnings that they promised. And then institutional investors can start buying the stock and drive it up.
Have you ever seen, I mean, like stocks IPO like this? And then, I mean, I'm sure you've seen them, but I mean, you make, I don't want to say, these things are zeros, but I mean, what's the record for a stock coming out as an IPO and then going off the board? I mean,
it happens more than you think. I mean,
really?
When we wrote the book, we found that 91% of all stocks undercut their day one low before they can go on for gains, and that maybe long term, 28% of them became investable with institutional support and heavy volume. And in the last 5 years, that number's lower. It's maybe more. We see more of the stocks undercut their day one low within just weeks and then continue to fall, and fewer than 20% end up being institutional investor grade. It's the last 5 years have produced weaker stocks.
Okay, IPOs to watch for. We touched on SpaceX here, one of the two companies from Mr. Musk here. Let's talk about the potential for IPOs to watch in 2026.
Yeah, I think we're still waiting for Discord. That one's been talked about for a long time. Stripe, a payment processor, and the longer they wait, the less I think these companies will be investable. I would certainly hold back my money and wait for some sort of due diligence phase. Same thing with Databricks. That's been talked about for 3-4 years now. But yeah, I think SpaceX, OpenAI, Anthropic, which is not on the list, and Starlink. I think all those would be potential opportunities that I'd be excited to watch.
Okay. All right. And then we're being asked about the most recent IPO from yesterday. Drones. I kind of like the symbol SWMR. Well, why don't you talk to us about that issue?
All right. Well, that one looks like it had a great debut. I was not watching that one yesterday. Like I said, I don't buy day one, but then I start watching it more after that. And look, it started trading around 12, got all the way up to 40 and down to 30. The key thing I think for people to watch on this is how does it do around the key prices of yesterday's high and yesterday's low. And typically when you see that, you just want to see how it continues to act after that. I'm looking here at their earnings, and I don't see, do they have positive earnings yet? My platform that shows earnings isn't showing my data. Are they producing positive EPS yet?
No, do not. I do not have that information. Also, Reddit on there, or it's not Reddit. Stripe to me seems like use it, very widely used. So we'll see. We covered SWMR. That was the most recent one. One I wanted to ask you about, and this guy, I have to tell you, bullish was not so bullish. And my buddy, so I still talking about that. Had that first day spike here, Because do you remember the original number? Wasn't it supposed to be like 32, 33,
It
something
was up
like
more than
that?
100% on day one. I'd have to pull up my chart here,
Yeah,
but
I thought it was, and then I just kept it rising, rising, rising here. But we're working on a 2 monthly green bars here. Are you bullish? Bullish.
well, I just looked it up. It looks like it was offering price was 37, but it
Okay.
opened all the way near, what is that, about 68 or something, went as high as 118 or so that day.
It actually it opened at 90.
Oh, it did open at
And
9.
and
Yeah.
it went to 118. I went to
And
118, and I remember my buddy that got us some shares on that. I remember talking to him, and I thought, the market was different. And I'm like, well, just stagger some orders out, 100, 110, 120, like 130, just, if it gets really crazy. And he didn't put anything out at 100. He saw it go up and then come right back down. He market order, and I think got out in the mid 90s. But great information coming from Eric Krull, our IPO expert, helping us out on pre-market prep. Always appreciated. Thanks, Eric.
thank you for having me. It's always good to be here.
Thanks, Eric.
Okay,
Yes,
Dennis.
S&P's just got hammered. Like I was like just trying to do the interview, and I let you run with it there because it was just 5 minutes of just straight down nonstop selling here. We're now 80 points from where we were an hour ago. We just dropped 80 handles. So PPI, which I thought they might shrug it off, they're not shrugging it off. They're really nervous about inflation. So, and I mean, that's probably, oil driven originally. Like I'm saying, it's not in the numbers, but the worries about inflation have come front and center because people see it at the pumps. They don't like paying more. And now all of a sudden, hell, X food, X energy here up 0.2%. Well, energy's coming, in the next numbers. So it's like, oh shit, now we're like trouble here with inflation. So market not loving any of that. Interest rate, lowering interest rates today. We have Fed day today. 0. It's got to be 0, Brentster. Look at the tool. It's got to be absolute
It is
0, right?
not actually 0. It is 99%.
99. Nothing's 100%. So 99% chance. Unless, Powell keels over and Walsh comes in here and just takes over right now. I mean, it's going to be, there's no chance.
April 29th.
Go to June.
April 29th, 99% chance of no cut. Go out to June 17th. We're at an 80% chance of no cut. I'm not going to share on screen. I'll just read you the numbers. July, 67% chance of no rate cut. September, 54% chance of no rate cut. Are these numbers updated since after the PPI? Yes, I think they are. The odds for October rate cut still right around 50%. Odds for December 9th rate cut, 36% chance of no rate cut for December.
Whew.
There was an Iran headline in that mix there when the market was moving lower. So Iran's pissed about attacking that natural gas field. They said they will retaliate against against the attack on their energy infrastructure, and they said they will hit enemy sites previously thought to be safe.
Okay.
In addition to inflation,
not only do we get bad PPI data here, we get hammered with escalation. So two things that the market does not like: inflation, escalation. The Asians, inflation, escalation. The market doesn't like any of that. So the question is, where do we go from here? Does the dip get bought? I'm going to say in certain names, yes. But in certain names, they're just a mess. Like you've got to really pick and choose here. Stock selection, stock pickers market here. It's been that way for a while here now. But there are certain names that just, are stuck in the mud, just can't get it going. And then there's other names that are making new all-time highs. So I think on the dip, Micron's still green for crying out loud here today. SanDisk is still holding up $10. You can see the names that want to go higher. Those are the ones, and again, they can pull the rug at any time. These rug pulls do happen. But, when you're a consolidation station, even on an STX been a consolidation station, Western Digi, these stocks were just set up to go higher, and they are, and they've done that now. Now you got to, you probably need dips to buy on those names. But this market is still in shopland. We're still range bound here, Joel. The bulls, I felt like the last couple of days wanted to grab control here. Does the PPI number today derail it?
Yes.
Our perennial
Derailed.
bear,
Yeah,
Mr.
yeah.
Joel Elconin.
Yes, brilliant response here by me.
Okay, I laughed out loud, and I cough when I laugh.
You
Okay.
guys want to fit in another earnings report too, or you guys want to do a couple ratings? We still got a few minutes.
Yeah, do the couple earnings reports here. I think they're going to take precedence over the ratings because the ratings are pretty small today.
Cool. Let's do Macy's first. Got a couple banners.
Relief
here.
rally.
Earnings
Up $1.18. Go.
Here's the chart. Here's the report. Q4 earnings 167 versus 153. Decent beat. Sales 7.64 billion versus 7.62 billion. Guidance. Company looking for 2026 earnings 190 to 210. Analysts up at 220. Sales 21.4 to 21.7 billion. Analysts up at 21.6 plus billion. Another case here of, I don't know how much the report actually mattered. The stock's trading up 7% here, despite some pretty concerning guidance, I would say.
Yeah, I mean, they're lowering 2026 full year. So here they just made $1.67 the 2025 fourth quarter. We know the fourth quarter is always the best for all retailers. But the entire fiscal year 2026 are looking at $1.90 to 210. So, that's down from 217 estimates. They are lowering the guidance. This is never a good thing, but you have a relief rally here. The stock's been absolutely killed. It's got a 4.2% dividend, which is safe for now. But is this the kind of company I was like, yeah, man, I'm going to really invest in that Macy's. That's the kind of stock that's going to really drive my portfolio to gains over the next decade. Hell no! So rallies, stocks, we just talked about this, stocks and the heavy downtrends, which Macy's is in. Rips are to be sold.
You did get a pop. You're still green on the session. Let's just go. The pre-market high is 1858. If they really want to get this going to the upside, they got a pair of highs to contend with it at 1890. But right now, that's not coming into play. See if this comes back into the top of yesterday's range. The top of yesterday's range, 1759, and that's right there with the 200-day moving average. So longer term here, Macy's has to establish a bid above that 200-day moving average to make some long-term progress. It's up $1.16. It's bucking the market trend. And, if you're hopping on this and you're excited about all the Macy's real estate and stuff that they're going to sell, you better see some immediate follow through off the open.
Let's do one more real quick. You want to do Jabil, JBL, or you want to do DocuSign, DOCU? Dealer's choice.
What's moving more?
Jabil is down about 1%.
Jabil was up. Jabil,
let's do
this
Jabil.
was up substantially here this morning. This is giving it all back and turned to the red. You can blame the stock, but you can also blame the market because it really started getting heavy hit after the PPI. So
Yeah,
again,
it's
probably not the environment to chase in, especially if you're going to go up and buy something. The high here, 280. Oh my gosh. February double top 280 as well. So perfect coincides. That was a spot to unload, and smart money unloaded here this morning.
To your point, Dennis, the quarter was really strong, like underline really. The guidance was solid, and they raised the 2026 guidance. So this was like a strong report. Just first blush, really strong report, really strong guidance. I think you're right on the PPI.
We're leaking, but we're above yesterday's low. So I'm going to try and look at the positive here and see a pair of lows. This is called split at like 253.75, 253.80. That splits the last 2 days low. If you're looking to see this dip, but if not, there's not much support underneath that if you lose that level until you get under 250. So here we are coming up on the 9 o'clock hour. Dennis, this has been one of the ugliest hours in the history of pre-market prep.
We lost like 60 handles since we started the show. It's been straight down. Choppy market, man. I still think we're buy dip, sell rips, but we'll see if we can stabilize here today. Get near the lows from last week. This buyer is there, but that's a hell of a lot lower here. That's
I
651 on
know,
the
I
SPY. I
know.
mean, we get down to there, there's gonna be people crying. That's 60 handles down. We just lost 60 handles in an hour, so never say never.
Yeah, coming up. Definitely a volatile open. We will be talking Mark Chaikin at 10 a.m. in the STN room. He is taking a different approach to this market, folks, and probably agree with his sentiment more than the bullish sentiment that's out there. But we will do that. CC Legator, who's been tracking these markets through the options markets, options unchained. We'll be doing that at 1:30 today, and that will be live on our YouTube channel. CC, great, calm, cool, collected way to look at these markets, expected moves, and potential hedging strategies. Whether you think you need them or not on a day like this, you probably wish you do. So, folks, thanks to the chat. Thanks to Triple D. I know a busy morning for you. Brentster staying on top of the news. Michael Feehan working hard overnight in the background there, bringing us news before it's news. That's it, folks. Pre-market prep. We're wrapping the